you gotta have physical gold and physical silver. That's gotta be your foundation, because that's what's going to help protect any wealth that you've accumulated.
Gold and silver have long been recognized as precious and coveted metals. Even today, precious metals have their place in a savvy investor's portfolio. There are many ways to buy precious metals like gold, silver, and platinum, and many good reasons why you should go treasure hunting. Precious metals are considered a good way to diversify the portfolio and hedge against inflation. But gold, perhaps the best known metal, is not the only one available to investors. Silver, platinum, and palladium are commodities that can be added to your precious metals portfolio, each with their own risks and opportunities. In today's video, we'll tell you what Lynette Zang had to say on what we can lose if we don't own gold and silver. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. The world's central bankers are having a grand experiment. In fact, they have been since it's been created. Every time they've gotten an unintended consequence, they're out of tools. They can't fight this. They're out of tools because they're out of purchasing power. They have to attack our principal, surging inflation, and fraying confidence. They're losing control of perception management, and it's not just happening there, it's happening all over the world. As the ECB joins other policymakers in raising interest rates, these fears have intensified because all this short-term debt is turning into a higher interest rate environment. So everything costs more. But what governments did, since they had to pay less in principal and interest because interest rates were negative or zero or close, instead of paying that debt and finding themselves in a better fiscal position, they continued to go deeper and deeper into debt. All the debt of all the world's central banks could actually contribute to inflationary pressures. We have gold, we have physical gold, and physical silver in our possession, as well as food, water, energy, security, barterability, community, and shelter. And what we're really seeing is the whole world imploding. We are at the end. There's nothing that's going to save the system. We must have physical gold and physical silver. It has to be our foundation because this is what will help to protect any wealth that we have accumulated. Precious metals offer unique inflationary protection. They have intrinsic value, carry no credit risk, and cannot be inflated. That means you cannot print more of them. They also offer genuine upheaval insurance against financial or political military upheavals. Gold's price is less affected by the laws of supply and demand. Simply put, when hoarders want to sell, the price goes down. When they want to buy, the new supply is quickly absorbed and gold prices rise. Unlike gold, silver's price oscillates between its perceived role as a store of value and its role as an industrial metal. For this reason, price fluctuations in the silver market are more volatile than gold. From an investment theory perspective, precious metals also offer a low or negative correlation with other asset classes such as stocks and bonds. This means that even a small percentage of precious metals in a portfolio will reduce both volatility and risk. Although they may come with a certain degree of security, there's always some risk involved in investing in precious metals. Metal prices may fall due to technical imbalances. The best way to invest in precious metals is to buy the metal outright and maintain its physical form, or buy exchange-traded funds that have significant exposure to precious metals or companies involved in the precious metals industry. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.